What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. We're going to be going over some electric vehicle stocks that you should have on your watch list for the future. These are going to be long-term holds, and these stocks can definitely grow a lot in value, potentially doubling, tripling, even quadrupling in price, or even further. So the first stock we have is actually going to be Lucid Group, LCID, and it's been doing pretty good this past week. It had a really nice run up after they announced that they're on track for 2022 production. So the numbers are looking pretty good. They're estimating production target of 20,000 vehicles in 2022 and 50,000 in 2023. So a really good forecast for this company. And if they can meet their expectations, then definitely we can see the stock go flying. So the next stock is going to be NIO, and they've been doing pretty good in the past year. Ever since we had that semiconductor shortage, a lot of these electric vehicle stocks have been getting hit pretty hard. So once that shortage ends, we do think that a lot of these companies, including NIO, is going to see another increase in price. But right now, it's been pretty consolidating within this past 3 months. A little bit on a slight downtrend, sitting at a mid $30 price point. So it is a good pickup, in my opinion, for the long term. Now, the next stock we got on the list is going to be Lordstown Motors, ticker symbol RIDE. And it's been doing amazing in the past week. It's up 16% on the day, 18% on the week. And that's because they announced that they're going to sell their former GM factory in Ohio to Foxconn. So a lot of these companies, they're doing a lot of great things. They're really preparing for the long term to really try and get their electric vehicles on the market and produce as much as they can with their limited resources. So this company is trying to get its first electric vehicle pickup onto the market, along with NKLA, Nickelo Motors. They don't have their vehicles out yet, but once they do, they're really trying hard to get their production line on set, so they can have a lot of really good consumers for their products. So Nickelo Motors, very infamous for their old CEO Trevor Milton, who was charged with fraud. But we do believe a little bit in this company, even though it's down so much. They really are hiring hundreds and hundreds of people for their plant in Phoenix, Arizona. So they do look like they're really trying hard to actually bring their electric pickup into fruition. Same with Lordstown Motors. These two stocks are in the same boat. They don't yet have any products yet, but they are working really hard to get that onto the market. So as with any electric vehicle stock, especially ones that have not yet produced any vehicles, such as NKLA or RIDE, you got to be really careful. So the best thing you could actually do is invest into an electric vehicle ETF. So you get the best of both worlds, or you could just buy a bunch of shares of each of these stocks, just to kind of diversify yourself within the electric vehicle industry, because we don't know which companies are going to fail, which ones are going to succeed. So if you kind of diversify a little bit in the industry and don't put all your eggs in one basket, you could see some really good returns pretty safely, because you're betting on the EV industry as a whole rather than just one or two companies. So this ETF is going to do pretty well. It's been doing pretty well, 41% in the past year, which is a lot better than a lot of these stocks. As we can see, a nice downtrend on NIO in the past 3 months, and this has been pretty flat because this is an ETF. It has some tech companies as well, because a lot of the electric vehicles, they do need a lot of technology, and this is going to give you really good exposure for all the necessary companies and technology that are needed for electric vehicles. So I am planning on picking up some shares of this into my long-term portfolio. Really good ETF to be a little bit safer on the EV industry side. If we take a look at their top holdings on this stock, well, first of all, let's go into what their fees are. So it is an actively managed ETF, I believe. And it's going to give you a fee, an expense ratio of 0.47%. So it's not that high, but it is a lot higher than those passively managed ETFs. So we have to keep that in mind. So take a look at the top holdings. We can see that we have Tesla, AMD, a lot of tech companies on the top holdings. We also got the Toyota as well as Intel for chips. So a lot of semiconductors as well, a lot of tech. We also have General Motors. We have Ford Motors. So a lot of great resources. We also have NIO, Honda Motors. So a lot of automobiles as well as technology. So I do think that this is a really good ETF that you should invest in if you do believe in electric vehicles as an industry, which we do see a really nice shift into the EV industry with all these manufacturers such as Ford, Honda, Toyota, all moving to the electric vehicle space. So we do know that electric vehicles are definitely the future. They're definitely going to be coming, and there's nothing really can really do to stop it. So in order to prepare for this for the long term, we can get into this ETF or any of those individual stocks if you want to be a bit riskier early, so we can have some really nice growth over the years and have some really good returns on our investments. So that's about it for this video. If it helped you in any way, please leave a like, comment down below your thoughts are on the EV industry, and of course, subscribe if you're new to the channel. It helps out a lot. Thanks for watching.